Golden Cross wins 33.9% of the time. We ran 1,187 signals across 303 Nasdaq stocks. Win rate, 33.9%. And the average trade still returned plus 3.53%. But there is a catch. Not every stock responds the same way. Here is the data. The Golden Cross is one of the oldest signals in technical analysis. The 50-day moving average tracks the medium-term trend. The 200-day moving average tracks the long-term trend. When the 50 crosses above the 200, a Golden Cross, it signals that short-term momentum has recovered above the long-term baseline. Buy. When the 50 crosses below the 200, a death cross, it signals deteriorating momentum. Sell. The logic is simple. Trend following with a slow confirmation. We applied it to every Nasdaq stock and measured every result. Before the results, a caveat you almost never hear. These are the 303 Nasdaq stocks still trading today. Companies that failed or were delisted are not in this data set. That survivorship bias slightly inflates everything you are about to see. We downloaded 6 years of daily prices, January 2020 to December 2024. Applied the SMA 50 and SMA 200 to every ticker. No commissions, no slippage, no additional filters, just the raw crossover signal. 1,187 trades. Here is what we found. Win rate, 33.9%. 33.9% of Golden Cross signals produce a winning trade. Average winning trade, plus 31.3%. Average losing trade, minus 10.67%. Winners are 2.9 times larger than losers. This is the asymmetry that makes trend following work. You do not need to be right on every trade. You need your winners to run further than your losers drop. That asymmetry drives an average return of plus 3.53% per signal. Every month, Backtest Lab runs our strategy across the entire market. 10 stocks make the cut. Each one gets a full research report, technical structure, social sentiment, news and macro and fundamentals. Then the following month we publish the verified 30-day returns. Every ticker, no cherry picking. The May issue flagged 10 stocks. The top 5 picks returned between 147 and 241% in 3 months. The letter is on Patreon. Link in the description. This is the distribution of 1,187 Golden Cross trade returns. Look at the left side. Losses are tight. Most losers lose less than 10%. Average loss, minus 10.67%. Now look at the right side. Winners stretch out 20, 30, 50% and beyond. That right side tail is where this strategy makes all its money. A few exceptional trades carry the entire strategy's return. Subscribe to Backtest Lab. We test a new strategy every single week. But the average picture hides which stocks are driving these results. Here are the 5 biggest winners. Vistra, VSD first, up 527%. Royal Caribbean Cruises, RCL, second, up 465%. Robinhood Markets, HOOD, third, up 461%. Tower Semiconductor, TSEM, fourth, up 365%. Arista Networks, ANET, fifth, up 347%. The pattern is clear. High momentum stocks with strong long-term trends. These are exactly the conditions the Golden Cross was built to exploit, sustained directional moves with room to run. Let us test the index itself. QQQ. QQQ, the Nasdaq 100 ETF. Here is how the Golden Cross actually traded it over 5 years. Each green arrow is a Golden Cross buy signal. Each red arrow is a death cross sell signal. The SMA 50 is gold. The SMA 200 is white. Watch the buy signals, they arrive after the move has already started. That is the fundamental trade-off of any trend-following system. You give up the first leg of the move to get confirmation. Now, let us see the portfolio result. $10,000. Both strategies. Same starting date. Gold is the Golden Cross strategy. White dashed is buy and hold. By the end of 2024, the strategy underperformed buy and hold by 11.9 percentage points behind buy and hold. The gaps appear every time a death cross forces the strategy to cash. The market recovers, but the strategy is sitting on the sidelines. For a smooth trending index like QQQ, the 200-day moving average moves too slowly to exit at the right time. The sector data tells us exactly where it does work. Here is the insight that changes how you use the Golden Cross. We broke all trades down by sector. Energy led with the highest win rate, 44.8%. Finance came second at 40.6%. At the bottom, Consumer staples, only 17.6% win rate and minus 2.36% average return per trade. By average return per trade, energy came out on top at plus 17.79% per signal. The Golden Cross rewards sectors with sustained directional trends. It destroys value in inverse ETFs and choppy sectors that mean revert. Filter by sector and you dramatically improve the edge. Subscribe if you want the sector filter code. Now, the verdict. Bottom line. Golden Cross has a real mathematical edge, 33.9% win rate plus 3.53% average per trade across 1,187 signals. The edge is real, but it is conditional. It works on high-momentum stocks with strong directional trends. It fails on inverse ETFs, choppy sectors, and slow-moving defensive names. 2 adjustments before you trade this live. First, no commissions, slippage, or tax in these results. Subtract 5 to 10% from every return you just saw. Second, survivorship bias. Failed stocks are not in this data. The real edge is slightly smaller, but it is still there. Use it on trending large caps in trending sectors with proper risk management. Subscribe, like, and leave a comment. Full ticker results and the backtest script are on Patreon, link in the description.